Okay, great. Now, can you just speak a bit? So some people, they think digital assets is just a fancy way of saying cryptocurrency, but at this point, I mean, it is a broader category.
Yeah, I mean, I think digital assets to me can be real estate. It can be fractionalizing real estate. It can be anything that you can transact digitally. I mean, I would argue that Venmo, PayPal are digital assets. My money in my Venmo account, I understand it's the currency is USD, but it's digitally. It's digital. I would make an argument to you if I invest in Yield Street, which owns from real estate assets to financial notes to crypto funds, Pantera and stuff, and we have Pantera guy coming. I would argue that is digital assets. So digital assets are broad. And in this day and age, it's good to diversify. So that's the one thing I'll tell you. So if the stock market goes down a lot, yeah, that's not fun, but I'm diversified into other assets. Digital could be Bitcoin. It could be having money in a Venmo account. It could be investing in fractionalized real estate or the down payment, the home equity loans for houses. I mean, that's as far as it goes. And listen, we're sitting, you and I are talking here, but in 96, 97, the internet, I started a textbook site in 97, and people said it's going to fail because people aren't going to give their credit card over the web. Well, I know people give their credit card over the web, and they do a lot more things now too. So is money, future of money, is that really not going to, people are not going to do future of money is digital. And so how do you transact that? You don't have to go through a middleman. Internet, you wanted tickets to an event, you always had to go through a middleman. You didn't go to a direct person. Now I get it, like Ticketmaster is a middleman, but you can also buy directly from others. Internet enabled that. Same thing with currency or digital currency or trading, or if someone wanted me to wire them money. If you use the bank, I have to go through 3 or 4 steps. With wiring them through my key, my private key, and then their private key, it was as easy as 1, 2, 3. I mean, I had to verify the security, but beyond that, there was no one else to get in the way.
Yeah, so I think if you could just expand a little bit, a lot of our listeners are already going to be up to speed on this, but this is partly what we're trying to do is to provide the education on this, that they're thinking, oh yeah, I know how real estate works, I know how equities work, I got fixed income, and then they would assume digital assets is this other thing where the underlying thing that you own is just purely digital. But as you said, like you could have digital assets that are tied to real estate. So can you just, I know this is basic stuff, but just so people are thinking about it right.
It's not,
can you explain
it's not like, it's not like total basic. So like at our event, BZ Digital Assets, we have real estate companies that'll be there that do real estate deals. Instead of like just investing through a traditional SPV model where you're investing out of your cash, they have this crypto stuff that can be sold at any time and transacted and transferred, and they can sell to multiple people at one time because crypto enables more democracy. It enables more democracy in terms of like how they can raise money from thousands of people through crypto and make it super, super simple. And then a whole resale market. So an example would be, say I invested several years ago into a pre-IPO company. For me to go sell it, there's other marketplaces to go sell stuff to. But if I did it through crypto, the ledger's there, it shows the history of it, but I can also go trade it a lot easier. I can go trade it a lot easier without having to go through a million different processes. And I just think of it as related to the internet. 30 years ago, you wouldn't have a one-to-one relationship with someone and sending out money, and Venmo, you go right to one person. That sort of has a characteristic, but when you talk about Bitcoin, for example, Bitcoin, the government can't inflate it and produce more of Bitcoin. The government produces trillions more in their money. They can print whatever they want. You can't go print more Bitcoin. It reminds me of where gold was back in the day, and we were traded off that value. Bitcoin is a limited quantity, and that is what is key in these discussions.
Yes,
and that's where in the real estate. And by the way, I haven't invested in much real estate in a fractionalized way, but I know it's gaining a lot of traction because there are companies just built on that, and they're able to truly grow and diversify by doing that.
Yeah, yeah, exactly. So that's what we're excited about here is this the tokenization of real world assets that combining the ease and flexibility, convenience of transferring a digital token to somebody through a blockchain, but yet it is pointing to a real world asset. So it's kind of, we would argue it has the best of both worlds there.
Have you done one by any chance yet? A real estate one?
We haven't done real estate here. We're focused right now on life insurance policies. We're trying to
through crypto.
Yeah, through blockchain. Yeah, digital tokens pointing to
interesting. Is that growing?
Oh yeah. That's we like to say we're the first in that particular space, but yeah, we think that's going to take off really fast.
So how does it differ than investing in life insurance policies just through cash?
I'm just not sure what you're asking me.
You're doing life insurance policies through crypto, right? Like fractionalized crypto? Is that how you're?
That's one aspect. Yeah, we're going to put some in a pool and then issue digital tokens that are fractional claims on the cash value of the pool. Yep.
Got it. Okay, so that's a way to break up the pool. So yeah, I get it. So you have a pool of these values, and then you're going to sell it off through digital currency because it makes it easier than doing it another way. Is that the idea?
Mm-hmm. Yep.
Yeah, and that's the power. And that's the power to do what you're doing would have taken 10 more steps. The power here is, and that's what I like. So another bad rap that digital assets got was, NFTs. Right? People are buying NFTs to capture Logan Paul's breath. I don't know, and everyone was just making NFTs of the first slam dunk, this, and that's where the concern is in the market. Where if you just keep doing that, you keep creating new NFTs, new things, eventually that has to crash because it's just the supply is infinite because you can create NFTs on anything, right?
Yeah, can you maybe speak a little bit about in the beginning it was a certain group of people that were interested in Bitcoin and things, but now it's bigger institutions are more interested in tokenization and blockchain. So have you just noticed over the years the shift? Can you comment on that at all in terms of let's say regular financial people who are more looking into this and realizing this is a real thing and this is part of what the future is going to hold?
Yeah, it's exactly true. It's becoming, this is how this works. We could say retail drives a lot of it, but without institutional buy-in, you're seeing BlackRock get involved and ETFs finally going to be created, the rest will follow. Mm-hmm. There's only a certain amount of supply of Bitcoin. So, and Ethereum is the back end to a lot of other apps, right? So, to me, and why we're very excited about the Benzinga Future of Digital conference is because there's new blood coming to this industry. We have multiple large firms from Invesco, but other ones that I don't know if I can name or not that will be there, and they are bringing their money to the space. When anyone's bringing money to a space, that brings more demand, right? Mm-hmm. If I said to you, here's 3 companies that are collectively worth $2 trillion and they're going to be at our events, I would think you'd want to be somewhere in that crypto space, okay? Because you're I don't know, Wayne Gretzky's line was, I go to where the puck's going to be. Well, that's what this is. Mm-hmm. That's what this is. Now, this is also where you have to be buyer beware, right? You got to be careful what you're doing. And then that's where you have to diversify. So when I had money at Voyager, I had money at other places too. There was a little bit of diversification and I was in the process of diversifying more. Didn't do enough quick enough, but it's diversifying, but you want to go where the puck's going to be. You're thinking about your life insurance policies and fractionalizing that. These institutions are coming to this market. Why? Because it's more efficient. And can they save money and not have to do all these transaction fees? Think about ACH fees. Think about wire fees. Doesn't exist. Yes, certain places charge it, but the cost is almost zero. So it is imperative that events like the Benzinga Future of Digital Conference happen because we need to talk about the industry. We need to talk about the stories of where it is solving problems, where it is being utilized. If BlackRock is doing more deals, et cetera, we need people to be aware of it. That's where it comes down to. And why do we do these events? We pick industry sometimes. Like, listen, it may be a lot easier for us to do a mining conference. There's a million miners. Everyone wants commodities, lithium, copper. There's a million companies. This is a tougher conference because you have two sides pulling at it. Guys who think, oh, crypto is, whatever. Then you have now these big banks coming into it. And now again, these ETFs approved. It's a very exciting thing, but no one wants to be first or what have you. And so the people that are at our event, Bending the Future of Digital, they're going to see the companies that are going to be taking names and numbers. And then you're going to be a year from now and saying, shoot, I wish I would have bought Tesla when it was at $8. $8. Like I originally bought Tesla, $3,400 worth. And it grew into, a 6-digit investment. And that's how I originally bought it. And it didn't sell a share. And you're going to find many opportunities like that in crypto. Kathy Wood says $1 million a share. Scaramucci says 250,000. Like these are real numbers. And I don't think they're just saying it to talk their book. I think they look at the dynamics. And I know people like to sometimes rip on Kathy Wood. She's one of the best investors of our time so far. People said, oh, she sold NVIDIA too early. She's bought NVIDIA at $5. She took that stuff that she sold and bought another company, a flying car company or something, and that went way up. So I listen to smart people that have a track record of success. And I don't have a short-term view. My viewpoint is we overestimate what we can accomplish in 1 year. We underestimate in 10 years.
Hey, everybody, this is Bob Murphy. Thanks for listening to this clip from the InFi podcast. If you like what you heard and want to hear more, please consider subscribing and share this video with others. We've got new episodes dropping every Friday with more insightful discussions. Stay tuned.